Whoa, Bitcoin has been on an absolute tear, smashing records and grabbing all the headlines. But, behind those dizzying numbers, there's a really fascinating story unfolding about who is buying and why. Okay, let's just dive right in and unpack what's really going on here. All right, so first things first, let's just talk about the number itself. Bitcoin didn't just break its old records, it completely blew past them, hitting a staggering new all-time high of nearly $125,000. Yeah, that's a monumental milestone. No wonder everyone is talking.
So, okay, that brings us to the big question, right? The real question we're trying to answer here. A new record is awesome, but what's actually fueling this thing? What's pouring gasoline on the fire? And let me tell you, the answer? It's a lot more interesting than you'd probably guess.
All right, first up, let's get a closer look at the numbers behind these headlines. So after hitting that incredible peak, the price kind of cooled off a bit, settling down in a range around $120,000. Now, you might see that and think it's a bad sign, but it's really not. This isn't weakness. For traders, this is a super classic move. It's called consolidation. It's basically the market just taking a breath after a huge sprint. And you know what? A lot of the time, that's just the setup for the next big move up. Okay, so what is really driving this whole thing? Well, the first major reason is a huge shift in who's doing the buying. This isn't your classic retail story anymore. Nope. Wall Street, they are here, and I mean in a massive way. I mean, just look at this number, $3.6 billion. That's how much money flowed into these new Bitcoin exchange-traded funds, or ETFs, in just the last month. These are the regulated investment products that make it super easy for the big financial players to get in on the action. It's like they've turned on a fire hose of new cash, aimed directly at Bitcoin.
And what's really wild is that it's not just about these new funds. I mean, if you look at the big picture and add up all the Bitcoin held by corporations and even some governments, they now control 3.64 million BTC. That comes out to 17% of the entire supply. So yeah, Wall Street isn't just knocking on the door anymore. They bought the furniture and moved in. And get this, it's not just what they're saying publicly. If you actually look at the data on the blockchain itself, you can see the biggest holders, the ones we call whales. They were quietly buying up Bitcoin, adding to their stacks right before this huge rally. It's so clear they saw this coming. And that's the key takeaway here, right? The smart money. They moved first.
But, this isn't just a crypto story. Not at all. There's another huge piece to this puzzle. The wider economy, the macro environment. It's creating like the perfect storm for assets like Bitcoin to just take off. So check this out. Recent inflation data from the US came in a little softer than people expected, 2.7%. That's good. Now, the core inflation was a little bit higher, which keeps the Federal Reserve on their toes. But overall, the trend is heading in the right direction, and that's making investors feel pretty optimistic. And here's a quote that just connects all the dots perfectly. This is from Haman Shumaradia over at CIFDQ. He says the rally was fueled by two things: that strong institutional demand we just talked about, plus this growing expectation that the Fed is finally going to cut interest rates, maybe as soon as September. And just how certain is the market about this? Well, according to the data, traders are pricing in get this, a 93.7% chance of a rate cut in September. That's huge. And it makes sense, right? When interest rates go down, holding cash is kind of pointless. So investors go looking for other places to put their money to work. And guess what looks attractive? Bitcoin. This chart, it's practically screaming that a rate cut is coming. Okay, but it's super important to understand this. This huge wave of optimism and all that institutional cash, it isn't just lifting up Bitcoin. The whole crypto market is rising with this tide. Let's take a quick look at Ethereum, for example, the second biggest crypto. It is also having a massive rally, and its price is getting so close to its own all-time high from back in 2021. And check this out. Ethereum ETFs have also pulled in over $500 million. So this isn't just a one-trick pony. This shows real, broad confidence across the entire crypto space. Okay, so a new record is in the books. We've got these incredibly powerful forces driving the market. The next obvious question is, what's next? Where do we go from here? From a trading perspective, what just happened is a really big deal.
You see that price level between about $122 and $123,000? That was the old peak, the all-time high from 2021. And for years, it's acted like a giant ceiling that the price just couldn't break. So by smashing right through it, well, traders see that as an incredibly strong bullish signal. It's like the old ceiling just became the new floor. And with that old ceiling totally shattered, traders are already looking up at the next major milestone. Based on all the technicals and the sheer momentum in the market, a lot of experts are now pointing to $135,000 as the next big target for Bitcoin. So if we're looking at the path forward, it probably looks something like this. First, we should probably expect the price to move sideways for a bit, consolidate, while the market just kind of digests these huge moves. But underneath it all, those key drivers are still there. You've got that strong, structural demand from institutions, and you've got the simple fact that there's a limited supply of Bitcoin. Both of those things really support the case for more gains ahead. And, this kind of brings us to our final thought here. For so many years, Bitcoin was seen as this retail-driven, almost anti-establishment thing. But now, with Wall Street's billions and Washington's interest rate decisions being the biggest things moving the price, it really makes you wonder, doesn't it? Is this the start of a new, more mature phase for Bitcoin? Or is it the end of the whole Wild West era that made it so unique in the first place? It's definitely something to think about.